don't have the mechanism to take on those investments. So it's easy to invest in the stock market and difficult to invest in a multi-billion-dollar pipeline that needs to be built. So ironically, it's the availability of projects in the US that is the challenge. The permitting, the regulatory frameworks, all that is effectively slowing down the ability to absorb that kind of capital.
Lisa tries to ask the question, do you think the Saudis will stick with Live Golf? Have you got an opinion on that, sir?
None, but I think they will stick, yes.
So I appreciate your time. Thank you, sir. Thank you very much. Totally well about that. Of I Squared Capital. You went there. I didn't go there. You went.
I know. I was like sort of, alluding to this because it's sort of some of the places that money is gone. And I know that you're kind of hoping one way or another in that particular area.
I don't think they stick with Live Golf. I think they wait until after the next tournament wraps up because it's going to be at Trump National in Washington, D.C.
Okay. There we go. Getting some headlines from Kevin Hassett, the NEC director. He's reflecting on that Wall Street Journal piece about a swap line for the UAE. Kevin Hassett calling the UAE a valuable ally. The Besson would help if needed, but ultimately a UAE FX swap line probably won't be necessary.
Yeah, this is going to be a delicate dance as some of the relationships in the Middle East are fought for. I mean, the idea that Asia right now, in particular China, is being really aggressive in the region highlights the need for extreme diplomacy and the desire among some countries to be courted.
Well, swap lines usually happen through the Federal Reserve, and they're traditional ones like Canada, Japan, the UK. But last year, the Treasury Secretary did a swap line through Treasury, and it was through Argentina. So if we were to see one, it would probably be Besson, similar to what we saw in Argentina. But I also agree with Kevin Hassett. I don't really think the UAE needs one.
That's the latest from Kevin Hassett, the NEC director, speaking to the press just moments ago. Coming up on this program, we'll catch up with Isabel Mateus-Alago of BNP Paribas, looking ahead to tomorrow's confirmation hearing with the Fed, potentially the next Fed chair, Kevin Walsh. That conversation is still around it from New York City. You're watching Bloomberg.
is telling you that some of the physical tightness is being priced out of the market. Whether that actually translates to the real world is a big question, but there you go. Dated Brent's trading below $100. Okay, let's also check in on how markets in Asia are faring. April Hong is in Singapore for us. April.
Yeah, Jumana, despite the spike in energy prices, we are seeing Asia stocks well in the green today, which is pretty remarkable given how, for much of the conflict, the conversation around Asia was dominated by how vulnerable this region was to energy supply shocks. But now investors seem to have made up their minds that the worst of the impact of the conflict on Asian economies, to some extent, is already behind us or already been priced into the markets. You think about how the couple of weeks ago, we already saw that bit of a valuation reset. So especially for the markets that are AI exposed, think Taiwan, think South Korea, they look particularly attractive. And all this is helping the MSCI Emerging Market Index to recoup all the losses that we've seen it clock during the conflict. And there's a couple of other things I would just note, including on how on the Korean War, you're still seeing it on the back foot today. It is leading losses in EM currencies. It's also lost by the most in more than a month. So to some, that also speaks to the need for the case for two-way trades, given the fluidity of the geopolitical situation. But as I said, Asia in the green for the most part today. Jumana?
April, thank you so much. April Hong in Singapore. Let's go back to our main geopolitical news. President Trump says the U.S. has fired upon and seized an Iranian-flagged cargo ship in the Gulf of Oman, and the first major encounter in the week-old blockade. Trump said in a social media post that the ship, the Tuska, tried to get past our naval blockade, and it did not go well for them. Meanwhile, Iranian news outlet Press TV said the country's military command would respond to the U.S. action soon. Joining us now is Paul Wallace, Bloomberg's managing editor for MENA Economy and Government, and also with us is Stephen Soshinsky, who leads our Asia energy coverage. Stephen, I'm actually going to start with you. We've had so much drama around the Straits on Friday. We thought it was open, and then, of course, it got closed again, and then it was controlled, and then it was dangerous over the course of the weekend. And now we're waking up to news that CENTCOM actually seized an Iranian-linked vessel. Walk us through these developments.
I mean, the weekend, it was like a Seinfeld skit, right? It's open, it's closed, open, it's closed. Just pick a side and go with it, I think was what the market was looking at. And clearly now it's quite closed. We saw traffic shut on Sunday. A day after traffic on Saturday was at the highest level since the war began. According to some estimates. So really, it's been a bit of a whiplash. But of course, now with Trump saying that they've taken that vessel and Iran saying that they're going to respond, you're likely not going to see very much traffic or even ships trying to go through at the moment. I look at liquefied natural gas very closely. I was monitoring 5 LNG ships that were getting quite close to the Strait from inside the Persian Gulf on Saturday. But then when there were reports of an attack within the Strait, as well as Iran sending out messages to ships in the region that the Strait was closed, you saw those ships U-turn or halt altogether. That's a big deal for LNG because not a single LNG shipment has been exported from the Persian Gulf since the war began in late February. But again, this is where we stand. I think the market is closely going to be monitoring how Iran responds, if they respond, and what this means for ships transiting that strait going forward.
Yeah. I mean, not just what it means for ships transiting, but Paul, what does it mean for the potential Islamabad negotiations that are supposed to take place this week? The White House saying that they're sending, once again, senior U.S. representatives to Islamabad for Tuesday talks, but could the events of the weekend torpedo these talks?
Yeah, I think they could. It's as Stephen mentioned, it's extremely confusing at the moment what exactly is going on. The Strait is open, the Strait is not as open. You have the two sides ratcheting up rhetoric against each other at the same time. Also talking about restarting the negotiations in Islamabad in Pakistan. It is possible that we do see talks this weekend. Trump has spoken about J.D. Vance going to Pakistan for a second round of talks. But certainly what's happened now I think it's clearly raised the tension between Iran and the US, and we could see that possibly, it's possible to scupper the negotiations. From Iran's side, and we don't know the answer to this, from Iran's side, the biggest issue, at least in the last few days or since Friday when they said the strait was open and when they initially said that, seems to be this US blockade. Iran said the strait is open for all commercial traffic, and it didn't insist initially on the US blockade being lifted at the same time, but that remained in place, which was somewhat confusing. Why would Iran open the strait if it hadn't got an agreement from the US that they were going to lift their blockade? But clearly they didn't. That blockade remained in place, and Iran is extremely upset about that. It's essentially saying we cannot open the strait if our own traffic, i.e. traffic to and from Iranian ports, is still blockaded by the US.
Yeah, and they've also vowed to retaliate. So let's see what happens in the next 24 hours. Stephen, at the top of the show, I was just recounting the price action that we're seeing in oil and gas markets today. Again, a lot of volatility in this space. How are traders reading the latest developments? Because again, of note that the physical market, and this is the dated Brent contract that I was referring to at the top, has broken through $100 for the first time since March 11. Are traders jumping the gun a little bit there?
I think that it's interesting because when you look at the drop in prices on Friday, oil and gas, while they are higher today, they have receded quite a bit. They've impaired some of those gains, and you're not really seeing a huge surge, especially the big jumps that we saw in March. And Brent is still below $100. Brent futures are also below $100 still. So I think that there is, obviously the situation is evolving quickly. The Strait of Hormuz still being shut, bad for the market, no doubt. But I think there are two things that the market is monitoring very closely. One, maybe there will be a breakthrough this week if there are discussions about peace, if there is a meeting in Islamabad, if there is some sort of agreement, anything that can maybe ease this back into opening. Maybe that is something that the market is monitoring. Also, second, and maybe more importantly, is that attacks on infrastructure in the region has essentially halted for about a week and maybe more, and that's really important because while the strait being shut, every day it's shut, that's 20% of seaborne oil and LNG that's not making its way into the market. If it were to open, a lot of that supply can come back rather quickly. The big fear and risk in this market is that if there's an attack on an offshore oil platform or one of the largest facilities in Saudi Arabia, suddenly it's not something that can be fixed in a few days and with ships kind of ramping back up. This is something that if repairs have to happen, it is weeks, months, even years. The LNG facility in Qatar, the world's biggest, 17% of that facility will be offline for 3 to 5 years, according to Qatar Energy, because of the damage that it got from an Iranian missile strike in the middle of March. So I think that's what the market is monitoring. And because those strikes have essentially halted and slowed down, and there's the tension, while rising, hasn't hit that level again, I think that's why you're seeing oil prices kind of recede a bit. But we'll see what happens going forward and as negotiations continue.
At Certified Painters, we are more than just your local painters. From the first brushstroke to the final smile, our promise is simple. Your home beautifully painted and worry-free. Certified Pro Painters, that's painting happy. Absolutely. It seems like we're entering into yet again another pivotal 48 hours in the region. Bloomberg's Paul Wallace and Stephen Statinsky, thank you so much. Well, joining us now is John Sfakianakis, Chief Economist and Head of Research at the Gulf Research Center. Really good to have you with us. In your research report, there's one comment that stood out to me saying, the current Iran crisis underscores a familiar lesson of economic history. Great powers rarely enter wars constrained by resources, but they almost always become constrained by them in the end. How long do you expect this constraint on resources for the region and for the world to last, even if the war is resolved this week?
Well, thank you. Thank you for having me, Jumana. Well, it depends. In this case, we already see that there are going to be challenges. And what the market, back to your excellent question, what the market is expecting is a reprieve. It's market is fatigued, it's tired, they're tired of listening to the issues, and they want to see an end to all of this. And that's why there is a huge disconnect between physical oil, which is trading today in Asia at 150, $160 a barrel, and spot oil, which is now 95. It's a bit up by about $5 since Friday. Not a biggie. And as you said, and your colleague said, in Asia, things are looking not so bad. So markets are beginning to price an end to this. And the end is not only the opening of the strait, it's also the inability or unwillingness of the US to have a land invasion. That is really a critical issue. So as long as there is no invasion at hand and negotiations continue, the markets will say, well, it's coming to an end.
Do you think going forwards, because of this perhaps new precedent that has been set around the Strait of Hormuz, that there is going to be a push from the region, from countries around and near the Strait of Hormuz to find alternative ways to get their oil out that doesn't necessarily have to rely on the Strait of Hormuz? I know over the weekend the IEA chief, Fatih Birol, was talking about the need to build, say, a pipeline connecting Iraq to Turkey. We need to see more of those. Do you expect there to be a real push for divergent corridors here?
I definitely believe that everything is going to be on the table. The region has to think of alternatives, and one of them will be the pipeline extension of the East-West pipeline in Saudi Arabia. As you mentioned, the Iraq pipeline, also the Fujairah extension, that is definitely on the table. But also the world is looking at the Strait of Hormuz and saying, why should I be so dependent, especially the Asian countries? So the region will need to continue to double down and to promote itself as the logistical port and center of the world for energy, which we all found out it's quite important. We cannot find 20 million barrels just like this. And Asia is going to be looking at alternative resources and energy in order to be less dependent on the region. But definitely, everybody in the Gulf is going to be thinking, how do I get less dependence on the Strait of Hormuz?
Yeah. What about Russia? Have Russia emerged as the primary winner over here with the release of the waiver, the U.S. waiver on Iranian oil, the fact that they are selling at higher oil prices now, and the fact that there are many